record. All right, so welcome everybody to our awesome first-time homebuyer presentation. I'm Ashley DeHart. This is Juanita Corona. She's my co-host for the evening, but she's all pregnant, so she's gonna just chill. There are cookies and waters. If you guys would like some, feel free to get up and go get them at any point. The point of today is to give information out to people who are potentially wanting to buy a home in the near future so that they are loaded with information and feel empowered when they go to buy their homes. So let's start off over here with our lenders.
All right, so we're the A&E Home Loan team, and we're going to be showing a little bit about what the first-time home buyer experience looks like from the loan side.
So just a little bit about us. Our names are Adrian and Erica Antunes. We are a husband and wife loan officer duo. Born and raised here in Fresno. We went to Fresno Pacific University for college. So just an overview, what we're going to be going over is pretty much, we're going to go over the basics, what is looked at in the process, what does the process look like as a whole. We're going to be doing some loan comparisons, so some common loan programs that for first-time home buyers that they might view. We're going to be going over the loan estimate, kind of explain step by step what that looks like and what's to be expected. And then we're also going to go over other loan programs and avenues. So the good thing to remember about loan programs is it's not a one-size-fits-all. So there are a ton of different options out there, and we fit your needs and whatever that may come of that. So let's see. So what is the process? The first step of the process is to first and foremost get pre-qualified. Now, this is something that you may go to your real estate agent first, you may come to us first, but most likely they will send you to us so we can look at your financials and see what you can afford. Now, what's looked at in the pre-qualification process, we're going to have you fill out an application first and foremost. It's going to go over some different pieces of information. And in that application, we're going to go over things like credit, your income and employment, and your assets. So for credit, we're going to be pulling a credit report, and that's going to outline your credit score, why the credit score is what it is. We're going to go over the debts. So it'll pull up all your debts that pull up on a credit report. And then if you have any derogatory marks on there, like collections, or maybe you have a foreclosure, anything like that, we're going to be able to see that and get ahead of it. Next is your income and your employment. So it is important for us to have the documents up front for your income and your employment, because you have to have a work history in a specific field to qualify for a mortgage. So if we know that up front, there are going to be no complications going forward, and we want to make sure that it's all verified. Next is going to be your assets. So we want to make sure that you have enough cash to close. Now, this can entail things like your bank statements in terms of maybe it's a asset account. It's going to be your savings, your checking. Maybe you have a retirement account that you want to use for your down payment and closing costs. So we want to make sure that there are no hiccups later on. We want to get that up front and just make sure that you are qualified and you have enough cash to close later on. So once we get all these things submitted and we know what you can afford, we will be in contact with your agent and with you to go ahead and search for a house in your price range. That's our main objective is to make sure we know. Should we?
Yeah, admit her.
Okay. Okay. So yeah, so after we get you pre-qualified, you're going to want to look at properties that are in your price range. So we will issue a pre-qualification letter to your agent and yourself. That way, you know exactly what you can afford, and that will tell the listing agent that you are qualified to buy this property. Once you look at different houses and you get an offer accepted, you go into what is called escrow. So there are a lot of moving pieces in escrow, and it's easy to kind of get confused throughout the process, but it's important to make sure that you have, great lenders, great real estate agents around you to really guide you through each and every one of the steps. So once we go into escrow, there's going to be some steps we're going to have to follow. On our part, one of the main things is making sure we order an appraisal. So the appraisal will tell us what the house is worth, and that's the value that we can go off of. So after escrow closes and you sign your loan documents, then at that point, you'll get the keys.
Right. Think let's try start next. Okay. So we'll get to the question after the presentation is done, so that way we have the ability to look at the questions.
Okay. So now there's words to know. There's a lot of different lingo in the real estate and mortgage transaction, and it's easy to kind of get confused with all the different acronyms. So one of the main acronyms that we use is what's called the DTI, or debt to income ratio. So there's two parts to that. You have your front end debt to income ratio, and you have your back end. So the front end is going to be your new housing payment divided by what you're making monthly. Your back end is going to be your new housing payment plus all the debts on your credit report divided by the income. So let's say you make $6,000 per month and your new mortgage is going to be $2,000. Your debt to income front end ratio is going to be 33%. Next is going to be your loan to value, or LTV. Now this is quite simple. So say you put 3% down, the minimum on a conventional loan, your loan to value is 97%. That's how much we're going to lend you. Next is going to be your cash to close. So that consists of things like your down payment, your closing costs, and your prepaids. So with the down payment, obviously, if you put 3%, the down payment is going to be 3%. Closing costs consist of loan costs, title and escrow, third-party fees, your appraisal fees, and then next is your prepaids. So prepaids aren't a cost associated with the real estate transaction. It is something that you're going to pay upfront for when taxes and insurance become due. So that takes us into our next topic, which is the escrow accounts. So with the escrow accounts, you can think of it like a savings account. So every month you're going to be paying a specific amount towards a mortgage if you have a fixed rate. So a part of that mortgage payment is going to be allocated towards your taxes and insurance. And what we do is we save that in a different account on the side. And then when your taxes and insurance become due, we pay that off for you. That way, you don't have to think about paying it off, and it doesn't just become one huge payment when those are due.
All right, so now I'm going to be comparing two very popular first-time home buyer loan programs. So there's going to be the conventional with a 3% down payment. That is the minimum for conventional. Then there's the FHA with a 3.5% down payment. Now you'll notice here that some of the key points about these. So say you could put down more, but that would influence things like your rate, your loan amount, things like that. But we're using the minimum for explanation purposes. So you'll see that the conventional has a lower down payment amount because it is 3%. We're using the purchase price of $350. It does have the interest rate here of 7.25%. Something to mention about conventional is that there is mortgage insurance if you're less than 20% down payment. However, it is typically lower than FHA because FHA mortgage insurance is through the life of the loan, and it's typically a little bit more expensive. So going back to conventional, you'll also see that the total monthly payment for principal, interest, taxes, and insurance would be around $28.73 for this specific scenario. Again, the cash to close for conventional is also lower because of that lower down payment. Now, when it comes to an FHA loan program, some things to mention is that the 3.5% down payment means that the down payment amount would be $12,250. It does typically have a lower interest rate when you go with an FHA loan program, but the higher mortgage insurance, like I mentioned before. The cash to close for this would be a little bit higher because of that higher down payment. Now, FHA loan programs also have what's called an upfront mortgage insurance premium, which is allocated into this loan amount here because you can roll it into the loan. All right, now I'm going to be showing a loan estimate. This is actually a real live loan estimate that's been shown before, and I did blank out some things for privacy reasons, but all of the information is from Fresno and is recent data. So you'll see here in the top left that the purchase price is $285,000. His loan amount was 7.25%. This actually has gone a little bit better since then. So we're using an FHA loan program for this person. His monthly payment here is $24.71. That's principal, interest, taxes, and insurance. And then you'll see on the right side, there's some costs for getting the loan. So on the left side of this column, you'll see some of the lender costs, and then there's services that you can't shop for and services that you can shop for. Then here on the right, you'll see there's things like the prepaids, you know, all the taxes and insurance and such. So for this specific person, the cash to close that he had to bring to the table was $19,488. As far as options go, so as we mentioned, mortgages aren't a one size fits all, and there is plenty of options out there. We did go over the FHA and conventional because they are more popular for first-time home buyers, but this kind of gives out some pros of each of the popular loan programs today. So FHA has a higher DTI ratio allowed and better rates with a 3.5% down payment. Conventional has mortgage insurance that drops off eventually, and it does allow for a low down payment minimum of 3%. VA loans allow for a 0% down payment, but of course you do have to be a veteran. For USDA programs, you also are allowed to have a 0% down payment, but it's only for rural areas. So if you're in the city, your house often will not qualify. It's typically houses on the outskirts of town. Now, something we haven't really gone over much is down payment assistance programs. Those are another avenue for people who maybe don't have as much cash to close, or whatever the case may be. They do have their own qualifying standards in themselves. And, you know, if you want to know more information about any of these programs or the down payment assistance, then we'd be happy to go over those in detail with you after this. All right, last but not least, you're maybe wondering, you know, do I qualify or not? So as we mentioned, we look at your credit, income, and assets. So say, for instance, you didn't qualify as of right now, but maybe your credit was too low. We can work with you, run a simulator, see what we can do to increase that credit score and what the time frame would look like. For income, maybe, you know, your debt to income ratio is a little bit too high. Maybe that's because your income was too low or your debts were too high. You can pay down those debts. You can ask for a raise, or you can, you know, bring down that purchase price. And then last is your assets. So maybe you didn't have enough cash to close on the loan that you want to, on the home that you want to get. Now, we can always look into how much can you save per paycheck in order to get to a place where you do have enough cash to close. Another option is, of course, the down payment assistance. Again, reach out to us if you're interested on learning more. So thank you so much for giving us your time. And if you do have any questions or concerns, our contact information is in that QR code. And if you came to this seminar, we have a special discount for you. Thank you so much.
Good evening. My name is Elisa Brunda, and I am with Farmers Insurance. And I am here this evening to give you some information on things that most people don't know if they haven't purchased a home. Most likely, you know, you grew up, you got a car, you got auto insurance, but never knew where to go for home insurance because this is your first time buying a home. So the things that I wanted to explain tonight are reconstruction costs versus the value of a home. Many times when you are searching for a loan, they are trying to cover the loan amount, and your insurance provider is trying to cover you for your reconstruction amount. So they're very different values. Where the value of your home is what it will sell for, the reconstruction of your home is what would it take to build your home from the ground up should anything happen to it. So there's a lot of things that go into this figure. And this is one of the things that if you have a local agent that is providing insurance for you is better than going online, because your local agent can actually visit the home and look at all the details that are part of the home. And we can come up with a very precise reconstruction cost based on the roof, the interior design of the home, so counters, cabinetry, flooring, how many rooms it has, how many bathrooms it has, whether each bathroom is a full, half, 1.5. All of those things are taken into consideration, and then we are able to give you a very precise reconstruction cost estimate. And that way you feel confident in the policy that you have, so you're not overinsured and you're not underinsured, because we are, again, considering all of those figures. The other thing that's nice about having a local agent is that when it comes to debt to income, so you just heard that acronym there when you heard about getting a loan. So when it comes to debt to income, your insurance does play a role in that. So the price of your insurance. And by having a local agent, you have the opportunity to talk to somebody personally that can configure your policies, maybe multiple policies together, to offer you discounts, or offer you discounts based on your occupation or your education. And that is the way that we could actually help you get into the home just a little bit easier if you are really close on the percentage trying to meet a debt to income ratio. I also wanted to talk about home warranty versus home insurance. There's a gap between the two, and they are both very important. So home warranty is important because this is what you want to carry with you to kind of fill in the gaps that your home coverage isn't going to provide. So when people think about insurance, sometimes if they're not educated on insurance, then they don't know that their appliances aren't covered, or that your plumbing is not covered unless you purchase these options. And a home warranty can be similar in options that you purchase, but they cover the gaps. So if you have home insurance, the things that tend to be covered are things that are sudden and accidental. So a tree fell on my house, a fire started, a pipe burst in my wall, and those are all incidents that are sudden and accidental. And any of the things that happen that were caused by those incidents, those are the things that are going to be covered by your insurance. But if it's like, my washer broke down, my dishwasher doesn't work anymore, I just moved into a house and now my AC is not working. So those are things that are more likely going to be covered under a home warranty if you purchase those options, or if they come with it automatically. And I know there's someone here tonight, so I'm sure that they'll give you great information on that as well. And with insurance, you definitely just want to be prepared and understand all of the information. So hopefully you get an agent that is willing to spend the time with you to educate you and go over what is called a declaration sheet. This provides you with the pricing of your insurance policy, but it also provides you with the values of all your coverages. So not only the value to reconstruct your home, but the amount of money that they will give you to live somewhere else should anything happen. And that's if there is a claim that is partial or full reconstruction of your home. So let's say that something happens in only your kitchen. You can definitely still live in your bedroom. You can definitely still use your restroom, but it's very hard for you to live in your home if you're not able to cook for your family. So this is a claim that would allow you to use what's called loss of use. And we would actually give you an amount of money over the course of 12 months to live in another place while your home is being repaired or rebuilt. So it's very important that you know that information, also what types of personal property are covered and how much they are covered for. And we also do extended replacement costs. So this is very important when it comes to, again, that reconstruction cost of your home. So let's say your reconstruction cost is at $300,000. Now, by having extended replacement costs on your policy, this allows you to have an additional 10 to 25% of money that would help you rebuild your home should the cost of labor or materials increase, or should you need additional pieces that you upgraded once you moved into the home, but we didn't see it when we visited your home and looked at all those details. So maybe you changed your countertops, changed your floors. So we are putting an extra cushion in there for you to have an extra portion of reconstruction costs. And lastly, I just wanted to also talk about ordinance. So we also include an additional 10% for ordinance and law. And this is so that if you have a partial or full reconstruction of your home required, we would give you an additional 10% of funds that would allow you to bring your home to code. So maybe you're purchasing an older home and it didn't have fire sprinklers, but when it becomes reconstructed, it's going to need to have fire sprinklers to meet the city code. So this extra 10% would help with those additional costs that were not foreseen in the beginning. Should you have any questions, I will definitely provide our contact information. I would love to speak to any of you and see how we can help you definitely get a great policy for your new home. Thanks so much.
Thank you.
Well, and thank you for that sort of little introduction there. I appreciate it. So, and also too with homeowners insurance, that's what takes care of somebody breaks into your house and takes some of your things, or some liability in your house where maybe somebody slips and falls and breaks their leg or something like that. So that's all homeowners insurance related things. So I'm with First American Home Warranty. And as she was saying, home warranty is basically a service contract for the property that pays for the repair replacement of the mechanical working systems and appliances in the house. So she was mentioning your dishwasher goes out, your washer goes out, your air conditioner stops working. When you buy a home, you'll have a home inspection. It's not mandated by law, but you need to have one, and your realtor will tell you that you need to have a home inspection. And they're going to take a look at the property and go through it and tell you some things that you might need to know about it that you might not know just taking a cursory look at the property. The seller of the property will disclose anything, or they're supposed to disclose anything that is detrimental about the property that could affect its value, or something that's not working or is in disrepair, that type of thing. But even when repairs are made, and or maybe not very much is found to be wrong, everything that's mechanical is going to be in the process of breakdown from the moment it's brand new, it's installed into the house. And so you don't really know as a first-time home buyer if next week your air conditioner is going to go out or if it's next year. And we see a lot of claims come in the very first month of ownership. And it really doesn't matter the size of the home, the area of the home, the age of the home. Sometimes the most beautiful, well-maintained homes, we have so many claims on that we can't even count them. And sometimes a little bit older homes just stay the course. So you really don't know as a first-time home buyer really what you're getting yourself into. And I think especially coming from a rental situation where you're used to calling a landlord when the air goes out. You're used to calling a landlord when you have a plumbing backup, right? You can't do that anymore. It's yours now. This is your problem now to fix. And so home warranties are very, very helpful to that. So our cost for home warranty is usually paid in that escrow process that's going to be spoken about in all the various different fees. It's one of those line item fees that you can pay for through close of escrow. If for any reason you don't have the cash, excuse me, for the total cost up front, which is going to vary somewhere around $500-600 for the first year, we can actually bill outside of that escrow process, and a monthly payment can be made on it. So anyway, that's home warranty in a nutshell. I could probably talk to you for 2 hours about specifics about that, but that's what you need to know at this point. Okay, thank you.
Very much.
You bet.
Next, we're going to hear from that home inspector.
Yay.
What we're going for.
All right. Hello, everyone. My name is Steven. I'm with Elite Group Inspection Professionals. We are a home inspection company that's been in business for just a smidge over 38 years. We are the nation's largest home inspection company under one roof. Fun fact. There's about 85 of us currently working for the company, largest in North America, like I said, under one roof. That is, kind of the asterisk there. Something that sets us apart from some of the home inspection companies, local and nationwide, is our insurance. We have $2 million in E&O insurance as well as workers' comp. which is very important. Ladders are tricky business sometimes, so you never quite know what's going to happen. One of the other things that sets us apart is all of the inspectors at Elite Group Inspection Professionals are California Association of Realtors certified. You're all good?
Yeah, we're good. Sorry.
Okay.
We're gonna-
No worries. So basically what your realtors have to go through to be accredited, we have to do the same thing as well. So it kind of puts us just a little bit above the cut of the rest. Something I like to explain to people is home inspectors are kind of like a general practitioner. So we're going to go to the house. We're going to take a look at the systems and the main components of the property. Foundation is a big thing. Roof is a big thing. We're talking about electrical and plumbing, some of the main systems that we're going to be looking at. And what I mean by general practitioner is the sense that we know what's right and we know what's wrong, but we don't necessarily always want to say exactly what you need to do to fix an issue. So if we see a plumbing system, a distribution system out of galvanized, that's something that's a dime a dozen. There are millions of homes with galvanized plumbing systems. However, something we didn't necessarily know when we started installing those in the 70s was that galvanized over time will build up corrosion, which can lead to trouble in the future. So back to the general practitioner, we're going to take a look at the plumbing system. We're going to say, hey, that's galvanized plumbing. We're not saying anything's necessarily wrong with it right now. However, you may want to call a licensed plumber, a professional in that industry, to take a look, to have a further evaluation of the system. Same goes with roofs, same goes with electrical. No home inspector has any business telling you what exactly is wrong with your electrical. However, pretty much every home inspector can tell you that that's not exactly quite right. So amongst that, there's a few other things that we're good for. The average home price in California right now, specifically more Fresno actually, is around $375,000 to $400,000. That's a pretty penny, okay? A home inspection is going to cost you anywhere from $350 to $450 on average. That's about a 1,000th of a percent of the home value. So I cannot stress enough how important I think home inspections are, as well as a few ancillary services like a sewer scope, as well as a pest inspection to be checking for termites. Okay, those are things that when you nip them quickly in the bud, they're not very problematic. But if you let some of those things go for a few months, they can be very problematic. The importance of the home inspection is we're protecting your investment. Like I said, we're 1,000th of a cost of the home price on average. We're definitely worth the money. I can't stress that enough. Like I said, we're checking the main components. We're not really here to tell you that there's cracking and chipping paint, okay? That's pretty general, as well as we're in California. This is a state that is constantly moving because of our geography. You're going to have a crack no matter what. I don't care if the home's 2 days old. I don't care if it's 20 years old. You're still going to have those kind of things. Something we not really are going to be taking a look at is water quality. We're not going to be able to confirm whether or not there is a lead-based paint in your house. That's someone you'd have to call for. Another thing is asbestos. We really don't want to claim whether or not something is asbestos or not unless we know for sure, because it's kind of a word that can make a lot of people fearful. And on that note, mold, that is the 4-letter word we tend to really stray away from in my industry. We like to call it microbial growth, because the reality is until you send that to a lab, you really don't know whether or not that is mold. You want to talk about mold with me, please? I would love to talk your ear off about that and how it's a little scarier sometimes than it really should be. On that note, sprinklers are something that are normally an ancillary service, as well as pool and spa. I like to throw that out as to not, have people expect to have that included and then say, hey, by the way, that's an extra $50. Some of the main areas of concern, like I touched on earlier, foundation, roofs, heating and air, electrical and plumbing. There are some electrical components that are a little more problematic than normal. So we will point those things out and tell you to, once again, refer to a professional. I really can't tell you how important I think a home inspection is. I know that I'm a little biased, but all of the guys specifically at our company and gals, we are happy to get up on top of that roof. We are happy to get underneath the house, underneath the house is where a lot of the problems sometimes are hidden. And that's somewhere that a lot of people don't like to spend too much time. I don't know if any of you have been underneath the house, but I can assure you it's not the most pleasant of places to spend your afternoon. That being said, we're happy to be down there. I highly recommend getting a home inspection by all means, as well as, like I said, the ancillary services, sewer scope and pest. Those are some things that will just pay tenfold in the future, and you want to make sure that you do not have those issues anytime you're going into a property. Like I said, this is pretty much what I do every single day, and I can't recommend this enough. If you guys have any questions at all, I would be more than happy to answer anything. We have 85 inspectors that are pretty much scattered throughout the state. So we have a very, very large reach, as well as we pretty much know anyone in the other states. So we're always happy to recommend people. So if I can answer any questions, please let me know. But other than that, that's the importance of a home inspection. Thank you.
Are we ready?
Yeah.
Okay.
Okay.
Is that okay?
Yeah, that's good.
Okay, so hello, my name is Letty Romero. I'm with Doma Title. I'm an escrow officer. I've been in the business for roughly about 17, 18 years. Left for a little while, I was a TC for a little bit and then came back and back in escrow. And we just want to give you guys a little bit of information that goes on once you open escrow, well, on the buyer's end.
I'm Tina and I'm an escrow officer also, and I've been in the business, started about 20 some years ago, I was in for about 10 years, left for about 10, came back, and I've been in the business for about 4 years now too. And we are from, I don't know if you said it or not, from Doma Title.
With Doma Title.
Yes.
So once you go through the process with your lender, you get pre-approved. The next step, you find the house that you want to buy. Once you get that down, you open escrow with your agent. It's not really a lot, buyer, but you'll open escrow, submit the contract to us. We then review the contract to see the terms that you agreed to with the seller, which triggers also the contract also triggers for us to start the prelim, which will give you the information that anything that's recorded against the property. Also, we will review the contract to see the terms and look at the time. It's usually a timeline on there for us that lets us know when your EMD is due, when the close of escrow date is going to be. So it's always a timeline. And then we work on getting that prelim. Once the prelim comes in, we will send that over to your agent so they can go over that with you, or we can go over it with you. And it just lets you know all of the things that are recorded against the property. And then we contact you regarding your EMD. You're able to wire that to us, or you can bring in a check, personal check. That's usually within the first 3 days escrow opens. After that, get the prelim going. During that time, you're going to be working with your lender pretty much most of that time. There's really just the EMD that we contact you, and the prelim we get out to you in the beginning. After that, during that time you're working with your lender, we're working with the seller to clear that title for you, so that when you get you purchase that home, you get the clear title. After that, I think the next time we will really need to be in touch with you is if there's anything that the lender will require, any information that the lender asks us for that we need to contact you for. Other than that, we don't really have too much communication unless you have questions. We don't have any communication with you until getting closer to the close of escrow, when you're about to sign your loan documents. We will get in touch with you to schedule your signing. And yeah, that's pretty much it. Once you sign, you get your breakdown on an estimated closing statement that shows all your fees, escrow fees, title fees, lender fees, and then see how much you're going to bring in, which is usually a wire. You will bring those funds in a wire, cashier's check, right before we close escrow. And then, yeah, you get to close escrow with everything comes together. We close escrow, and then you get with your agent to get you the keys to your new home after we record your grant deed. Once we get to that point, escrow closes probably like within the next couple of weeks or so, or within the next 30 days, you will get your title, your homeowner's policy. That's pretty much the basics of the buyer's end or escrow.
And just to go back to what Letty was saying too about the EMD, because a lot of buyers might not know what the EMD stands for, which is the earnest money deposit, which is the initial deposit that the buyers have to put down. And we will contact the buyers. We'll get the information, their contact information from the buying agent, so that we can send a wire to the buyers, so they can wire their funds. But they can also bring the cashier's check or a personal check as well, just for the earnest money deposit. And just a little bit about wires also, we do require that everyone, whether it's the buyers or anyone sending us money, calls us to confirm any wire information that we provided them, just because wire fraud is on the rise nowadays too. So we definitely want everyone calling us to confirm the information that we sent to them. And like Letty said also, you know, we aren't in contact with the buyers a lot during the transaction. I'm gonna say for 95% of the time. But sometimes we might need to reach out to the buyer to get their vesting information, to know how they're gonna hold title. But if buyers, if you have any questions at all, we are very good at holding your hands. You can call any of us and, we'll answer your questions, any concerns that you might have as well too. And again, once we're close to the loan documents, we're going to contact the buyers, to find out one, if they live in or near Fresno. If not, if they're not in Fresno, if they're in a different city or state, then we will contact a notary service in that area, who will in turn contact the buyers to set up the appointment to sign their loan documents. And then we do require wires with the closing funds, but they can also do a cashier's check if we have 24 hours ahead of time, if we have that. And then the house is theirs. Right?
All right. So we have hypothetically bought a house. We've gone from talking to our lender to getting all of our inspections and warranties and insurance down to our escrow, and woohoo, we got our keys. So hopefully you feel very informed and more comfortable with the home buying process. And of course, if you have questions, your realtor is there to answer any of that and more, and to help connect you with all these wonderful people during the process of your purchase. All right. Have a good night.